Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, February the 14th. Happy Valentine's Day, everyone, and happy Family Day weekend. I hope everybody's having a fantastic weekend. I apologize for not posting out a video last week. I was pretty under the weather, and I'm still a little bit under the weather now, so just bear with me. So let's just, we missed last week. I think I did post out just a short text message in the newsletter saying to look for resistance. We're looking for a bounce in the Dow, and we're looking for resistance between, I believe it was 15,900 and 16,100. So you can see we closed the market out. I know this looks a little bit messy. Let me just zoom in here. We closed the market out around 16,000, I believe it was 16,127. So we got above 15,900 and we got above 16,100 slightly. So if you look at where we are now in the market, we had this low in play here off of this wide range bar, and we broke above here. We broke this trend line here, and that's sort of what gave us a clue that we're ready for a pretty decent bounce. So the question is, how high will this bounce take us? Well, we've already met these targets around 15.9 to 16.1, but now, in fact, the market is starting to look a little bit more bullish from the perspective of, you've got the 8-period exponential moving average about to cross over the 21-period exponential moving average right in around this area, and that in itself would be fairly bullish. If we look at, let me just move this around a little bit. If we look at where we might have some potential resistance, you've got, let me just extend that trend line. We're right into this, this sort of trend line up here. And the question is, are we going to break it? We've also got a 5 ATR 20 trailing stop, which lines up with a 78.6% retracement. Now, these retracements are based on this major high, this minor low, right into some of these levels here. So I think the Dow, from the Dow perspective, I think what we're looking at here is, if we can get above this trend line, then I think that a retest of these highs makes sense. Somewhere around, these highs come in around 16,500 or thereabouts. Let me just see here. 16,000. Got a lot of things on my chart here. I intend to clean this up for next week. So 16,500, right around there. If we can get above this trend line, then that's what I'd be looking for. If we can't get above this trend line, as long as we hold this low, like if we come back down, and let's say we could do a scenario like this where we put in a lower high, or rather higher low, sorry, and then we break through, then I'd be looking for a retest of those highs. At this point in time, you can see momentum on the stochastic oscillator is heading into overbought territory. But as we know, these momentum indicators can stay overbought for long periods of time. And then if you look at the MACD has just crossed over, but it's got zero line resistance overhead. So we're going to need to see how this develops going into next week. I'm going to jump over to the Nasdaq. Let's look at the sister indices. The Nasdaq broke out to new all-time highs this week. So if we use the Nasdaq as a proxy, the Nasdaq is sort of telling us that the market may want to go higher. Okay, so we've got that situation going on. We do have 5 ATR 20 overhead resistance. If we can break through that, I mean it's blue sky territory here for the Nasdaq. And if we look at the S&P futures, so the S&P futures are coming back up to, re-challenge their all-time highs, okay? Around 18, let's just call it 1850 for a round number. It's around 1847-ish. But they're, the S&P is coming back up to retest and to re-challenge its highs, in slightly overbought situation from a stochastic standpoint. And the MACD still has a lot of room to go. So if we look at it from that perspective, you've got the 8-period crossing over the 21 exponential moving average, and there's no reason to really fight this. The real question, though, is whether or not we're going to kick off a new uptrend. If we're going to not kick off a new uptrend, but rather continue on this this uptrend to new highs, and to start putting in some higher highs in this market structure. So let's take a quick look at the transports. The transports are sort of, they look a little bit more like the Dow. They're not necessarily lagging the Dow. Well, they seem to be a little bit. I haven't run a relative strength analysis on the two, but comparing the two, but you know, they're basically doing what the Dow is doing. Now, I just want to jump over to another chart. I mean, we've been talking about, you know, the seasonal tendency. Let me just find the proper chart here. Just bear with me. If I were smart, I'd probably just pause the video. But okay, if we look at the Dow, let's look at the Dow from a seasonal perspective. Over the last, oops, let me type in the correct symbol first. Over the last 5 years. So if you look at, here's the seasonal tendency over the last 5 years of the Dow. This is the seasonal average, and you can see. Let me just grab a pen here. You can see this is where we are now, right, in this week. And if I just sort of drop it down, you can see that at the beginning, on average, at the beginning of March, end of February, right around this area, you know, we sort of bottom, and we have a tendency to move higher into, let's call it the middle to end of April. Okay, so from that perspective, we have the potential, you know, we're breaking out to all new time highs in the Nasdaq, and we seem to be, you know, sort of, you know, coming back up to potentially challenge the all-time highs in the Dow and the S&P futures. So if we look at it from that perspective, we're coming right into the end of the month here, you know, in the next week or two, and you know, we could be finding a bottom here, and we could, you know, potentially, if this seasonal tendency plays out, have the potential, you know, to rally for the next you know, 1 to 2 months. So if we look at it from this perspective, I'm keeping an eye on this. I think this is important, and looking to see, you know, if we're actually going to get some new action back up to the high side. So I hope that all makes sense, and looking at a couple of different data points to put it into perspective. I think, you know, the Nasdaq is sort of telling us it wants to go higher. The other indices have not confirmed yet. So let's jump over to look at a couple of currencies. Let's look at the dollar index. So the dollar index is right into 80.21 support. You know, the breakdance fight continues. It's just back and forth in between these levels. It's starting to get oversold. Not a lot to talk about there. Let's look at the euro. So the euro's into, you know, this key level 136.83. It could potentially come back up and retest the highs around 138.28. So, you know, it's just another, you know, potential jump of, you know, from one level to the next. But essentially, these markets are sideways. Let's take a look at the USD CAD. So the USD CAD is trading below $1.10 now. I'm looking to see, you know, now that momentum is bottoming, I'm actually, oops, not sure what happened there. Okay, now that momentum is bottoming here, and we've sort of pulled back, you know, we've had this pullback here. We've got a developing, not a developing, but we do actually have a trend line. Let me extend this forward. So we've got, you know, trend line support there. We've got 5 ATR 20 support just below it. And if you look at where we are in terms of, you know, we're pulling back and momentum's getting, oh, that's a weird pen. Let me just change this. And momentum's getting oversold. Looking to see if we can shift momentum back up to the high side, break this trend line, and come back up and retest those highs. Now, you know, we're sort of in the middle here because we're at $1.10 roughly, just below $1.10. But, you know, you've got support here and you've got potential resistance up here. So you're sort of in the middle here. And I think what I'd be looking for is a break of that trend line to see if we can come back up and re-challenge the highs. So there's not a heck of a lot going on there, but that's just kind of what I'm looking at. Is it tradable? Well, not until it breaks that trend line, really. So let's take a look at the natural gas. So the natural gas had a good run, and I'm sure a lot of this has been precipitated by the cold weather. among other factors. And now we're just, we've got a lot of resistance overhead here. You can see this. It's not quite a gravestone doji, but you've got this distribution candle here on a little bit higher volume. It's not, excessive, but, this is going to be a challenge point, the high of this candle. But if we were to break the high of that candle around $5.74, then I think we'd really, you'd probably really see a pop to the upside, because all of the, the people that were distributing this market here would get blown out, and we would be pushing it higher above there. So that's, I think, an area that I'd want to watch. I'm just going to mark this red. Okay, let's just mark that red. I think that's going to be the major resistance. We're still kind of in a sloppy manner, trending higher, but I don't think there's anything actionable right at this point in time. We could get a retest of the highs, but until we break those highs, it's about 50 cents higher, which is a pretty big move. I wouldn't get all that excited about it. Let's take a look at the crude oil. So the crude oil is into, this major resistance level here. We came up and we touched $1.32 a barrel. And, it's funny how I've had this level on my chart for a long time, and it's funny how we came right into it and then we came right off. But you can see here we couldn't get through resistance, but we also didn't break support of the 8-period exponential moving average. So the real question is whether or not we can get through this major resistance level. We're right around $100 a barrel, and that is a major level. Hold on one second, please. Sorry about that. That is a major psychological and technical level to get through. But I think, above that, $101.32 a barrel. If we can get above that, that would open up the door to, $110 to $115 a barrel. So at this point in time, I don't think there's anything really actionable. I do like how my trending indicator rolled back to the high side, after a multi-month down move. So I am watching, I'm actually just going to mark that. I am watching this situation here, where my trending indicator has gone positive after this, being negative for this long period of time. So if this situation persists and we get a break of 101.32, then this is going to get really interesting. You can see we broke the 5 ATR 20 and it's now become support on the downside. The major support obviously is way down here around $91.17. So we were looking for a bounce off of that bottom, and that bottom is held. Now the question is, can we get through resistance? Nobody knows until and when and if it does happen. So let's jump over to some other markets. Let me just see here. What have we not looked at? Let's look at the metals. So gold had a very strong week, and you can see we had this zone delineated going back a number of weeks ago, and we did hit, I should probably push these boxes forward, but, we did think that gold was going higher several weeks ago, and we marked these zones that we thought that we could test, and we did touch the top of this zone here. So at this point in time, I don't really have any hard targets here, but if we can get through, let's say, the top of this zone, these targets have been met. If we can get through the top of this zone, then I think 1361, a retest of these highs going back in this area, would be in play. Not sure why I have that strange color on there. Okay. So a retest of these highs would be in play if we could get above, this level here. We are, entering into overbought territory. So the question is, are we going to go momentum here? In fact, let's go and take a look at, some of the momentum charts. And let me just refresh this and see if we have any major signals coming in here for any of the metals. So it's just refreshing here. Apologize, I should probably pause the video when we're doing these things, but let's take a look at gold first. I can see a signal on the silver. The gold futures, okay, so this is the weekly chart. This is a daily chart. Let me just expand out the daily chart. We had a Darvis squeeze breakout long signal at 1279 with a target of 1321.80. So that target's essentially been met on the daily chart. You can see here, this was a 4-day signal that played out quite nicely. Let's take a look at the weekly chart. and expand the weekly chart out, we don't have anything setting up on the weekly chart at this point in time on the gold. So let's go over and look at the traditional charts. Let's look at the traditional charts for the silver. Silver had a really strong day on Friday, and you can see here we had this zone delineated all the way back, into January, the beginning and middle of January when we were looking at this, and we just touched the top of that zone at the close of Friday. But this was a humongous move. I think it was a 5 or 6% move in silver. If you look on the chart, like I haven't seen a wide range bar like this in quite a while. You had one here, you had one here, but I mean this was a pretty powerful up move. So you're right into the top of that zone. That target that we had talked about weeks and weeks ago had been, that target's been met. And let's take a look at the momentum charts. Let's take a look at the momentum charts in silver to see. Let's look at the silver futures. So let's see. This is the daily chart. You had a long signal here at $20.34. This isn't hindsight. This is just this is an indicator that I wrote going back a number of years to look at momentum-based markets. When we break out of ranges and we get an expansion of volatility. So this was a long signal that fired around $20.34 and had a target of $21.71. So that target has almost been met. But for all intents and purposes, that target has been met on the daily chart. Let's look at the weekly chart, see if anything's setting up. And we have a break of a Darvis box on the weekly chart, but we don't actually have a Darvis squeeze signal. You've got a blue Hakanashi, which is telling you we're going positive, but we don't really have any setups there on the momentum charts on the weekly chart. So there were some on the daily charts. They've already played out, and basically that's what we have there. So let's flip back to the more traditional charts, and let's wrap up this video by looking at, let's look at the 30-year bond. Excuse me, the 30-year bond is pulling back, holding support around the 21 and the 8 exponential moving averages. Momentum looks like it's starting to bottom. So the question is, are bonds going to catch a bid higher and start pushing higher and push interest rates lower? So I don't have a lot, I don't have a heck of a lot on this, but let's just follow through the process. Here is the 10-year. So the 10-year is looking, yeah, I mean, there's not a heck of a lot going on, but it does look slightly like it does look more bullish than bearish to me. And I'm not sure if these fib levels are still relevant. Let's see. Yep, they are. So these fib levels here, which are measured from this major high here, this major high, this major low, we're looking to see, we tested the 50%, looking to see if we can get through the 61 at that level, 126 and 24.5. Okay, so let's take a look at the inverse of the 10-year. Let's look at the 10-year yield, TNX.X on TradeStation. And, we had this double top formation that we talked about going back quite a ways, and we're getting a bounce here around a 78.6% retracement of this low to this high. And the question is, we're just right in the middle of the range here. We put in a lower high, but we don't really have a heck of a lot going on here. Interest rates aren't really going to get anything going or get anything interesting happening until we can get above 30 on here, which is about 3% in the 10-year. Okay, so that's all I really have this week. For those that attended the CSTA Oakville chapter meeting last Wednesday, I did a presentation on trading and investing plan development. It was good to see everybody out that came. I thought it went better than I expected, and I appreciated seeing everybody's participation and everybody's feedback. I appreciated that. I don't do a lot of presentations, but I thought that went better than expected. So I was happy to do it. I hope it helped, and I hope this video helps. I don't really have a lot this week. I'm not really, I'm not in the zone right now. I mean, trading's been a little bit slow for me the last week or two. I'm looking to ramp things up as we get into the end of the month. Start looking for some good swing trading opportunities again, and start really getting back into it. I've just been doing little trades here and there, but nothing major. I did miss a couple of trades that we're setting up, but I've got some other things going on, and hope to refocus and re-energize in the markets next week, and looking to start looking for some more opportunities that I'll discuss going forward. So I hope that helps. Good trading, good investing. Have a great Family Day weekend, and I hope I didn't miss any major markets to review. If I did, just feel free to send me an email through the meetup group here, and I'll cover it off in next week's video. And have a great, safe weekend. I don't know if we're going to get this huge snowstorm everyone's been talking about, but if we do, be safe, and we'll look forward to seeing you at the next update or at an upcoming CSTA Oakville meeting. So all the best, good trading, and take care.